Hey Bulls and Bears, how's everybody doing? I hope everyone's doing well. I apologize I did not get a report out yesterday, but I'm back, and that's the main thing, and you are here, and thank you for being here. Let's talk about what Bank of America is saying. Bank of America is warning the Fed. Now, just was it last week or 2 weeks ago, we had a warning out of the UN warning central banks around the world, do not raise interest rates or stop raising interest rates. No more rate hikes, basically, is their message. Why? Because everything is so over leveraged. Something is going to break. Look what happened in the UK with the pensions. The pensions were on the verge of defaulting. The same thing here. It's a Ponzi scheme. Pensions are a Ponzi scheme. They don't have the money put away. So they always have to have this continuous inflow of new money, reinvestment, and investing to keep the scheme going. That's why I call it a pension scheme is a better name for it. So it has to be continuously low interest rates, more debt, endless creation of new money out of thin air to keep these programs funded. And what happens when they raise rates or when something throws a monkey wrench in the machine, then you see warnings like out of the UN just a couple weeks ago. Bank of America. Bank of America warns Fed must slow down now or risk breaking the corporate bond market. That's another thing. All this corporate debt, all these corporations that actually should not be in existence right now because they're only surviving on debt and the ability to sell off their debt to the buyer and lender of last resort. Now, as far ahead as we can see now, they're not showing any sign of slowing down. In fact, there's another rate hike on target, and that's underpinned by a stronger jobs report than we just had here recently. So we had this 260 something thousand jobs added in September. And it's funny because this is a Wall Street Journal article, and the article shows a picture of a Chipotle restaurant. So they're talking about the jobs added and a Chipotle restaurant. So that kind of sums it up in a picture right there. A lot of these jobs are just lower paying service sector jobs. That's the majority of U.S. jobs total, and that's what's being added, service sector jobs. But that also doesn't give you the full picture because what about the job losses? If you subtract the new job losses, that number would be much lower. So we're looking at one column, but we're not balancing out with the different column, the pluses and the negatives. In this case, jobs added versus jobs lost. So it's another phony number, but they're looking at that and they're going to use that as justification to raise the rates. Once again, we've got another 0.75% rate hike, is what most people are saying. Doubt they'll go a full 1%. 0.75% tends to cause less panic when you see one full percentage point increase. Now, speaking of worldwide global economic carnage, look at this news right here. Company insolvencies hitting a 13-year high in England and Wales. And it's going to happen here. I mean, these companies cannot survive. One, consumers are running out of money. People are draining their checking accounts, their savings, and it's not going to be pretty. Look at what's happening with the retailers right now. We see the surge in inventory. We see car prices actually starting to come down. We're going to do a full report on that actually in a few days, maybe in the middle of the week, maybe early in the week. Car prices came down again for the most recent month that we have data on. We're talking about used cars. And so there's signs that the consumer is either tapped out or getting closer to being tapped out. We see credit card debt took another rise. Recent article here. Rising card delinquencies spotlight paycheck to paycheck pressures. That was reported out of payments.com just recently. Another article here out of U.S. News. As buy now, pay later plans grow, so do delinquencies. So we're continuing to see delinquencies rise in credit cards, auto loans, and a lot of people went to these buy now, pay later apps, which is essentially a credit card on your phone, right? So you buy something, it's the same as cash, you pay it back over a set period of time, usually a year, sometimes 6 months, sometimes 18 months, and you pay it back without interest. So it's actually a little better than a credit card because it gives you more time to pay it. So it's kind of like a balance transfer. We have a year or 18 months to pay off the balance, but it's a balance transfer each time you make a purchase and you agree to buy now, pay later on one of these apps. So signs are starting to emerge. And I've always called this a slow motion collapse, a controlled collapse. But we could wake up tomorrow, we could wake up next week, and this whole thing could have imploded. This could implode anytime. I don't think they're going to allow that to happen. Could it happen? Absolutely. We could wake up and the credit markets will be completely obliterated. the bond market in chaos, big spike in interest rates because something broke, one of the dominoes fell, and that's when you see the real chaos start to really hit home. But until then, it's not really noticeable unless you're really paying attention and watching daily news reports like we talk about here. But most people, most of the population, I'd say 90+%, really don't know that something is really, really wrong and what's really happening. They'll always find something to blame it on. People are still blaming what's happening today. They're blaming it on the health crisis. We still have cities with moratoriums on rents, and that was around or initiated back in the health crisis. Here we are now, 2+ years later, and these many cities still have these programs in place, and people don't think that's strange. People aren't scratching their heads that something else is wrong here. Everything is not about just that there was a health crisis here, within the last couple of years. That's amazing, but people just go on their days. But most people honestly don't have time. Most people are working so hard, 2 jobs, 3 jobs, 2 jobs and a side hustle, 1 job and 2 side hustles. Most people are just trying to get by. They get up, they're busy from morning to night. They're trying to make ends meet. They're paying bills, car troubles, repairs, family, things like that. Of course, there's a lot of other people out there just partying and they don't even care. But a lot of people, the people that are trying to get by, that have financial responsibilities, a lot of them are just too strapped, financially strapped for time. When it comes to taking care of a family and working 1 or 2 jobs, that's pretty much your whole day right there, and you're lucky to get much time off to try to research the financial situation and research the economy. That's for sure. And everything's so great here in California that I'm getting a stimulus check from the state. So apparently somebody else knows something's wrong and that people are struggling financially. So it's going to be anywhere from about $250 to a little over $1,000, depending on how many dependents you have and your income and stuff like that. But yeah, California sending out stimulus checks actually, I think, starting Monday, and they're going to be fully sent out. They're all going to be completed by, I believe, the end of January. So over the next few months, yeah, we're getting stimulus checks out here. It would be nice if we didn't need stimulus checks. It would be nice if the cost of gas comes down. That would really help. Or the cost of a lot of other things that we see, not just in California, but across the country. So yeah, the stimulus and the rescue programs are continuing. That should make it pretty clear. I don't know how else to make it more clear, unless you wake up and the financial system has imploded, banks have failed. I don't think that's going to happen. There's people out there saying that could happen and that it will happen. I think it's going to be a continuous, controlled decline of the economy, and people are just going to go slowly into debt. It's the frog in the pot. They're going so slowly into debt that they don't really pay attention. But a lot of households are just going to wake up one day and they're going to say, wow, we missed our payments last month. And 20 million people now can't pay their utility bills. They have to have a rescue program for 20 million people for that. And it's just going to continue. Longer food lines, more rescue programs, more buy now, pay later schemes to keep people buying stuff they can't afford. What else is going to come out here to keep kicking the can down the road? The can's already down the road, and it's down the road so far that it's over the cliff. The road has ended, and it's over the cliff. Just most people haven't realized it yet. So either one, something's going to break. Boom, we're going to wake up and there's going to be chaos, carnage overnight, financial Armageddon, stock market plunge, or it's just going to be a continued controlled collapse. Either way, there's no getting better from here, on a larger scale. Now, for yourself, if you're prepared, this may be a tremendous time to actually gain wealth from this, from what we're going to see coming up here. We're going to see buying opportunities in some area. The housing market, automobiles are coming down, as we talked about. We'll talk more about that in a few days. And some other quick news here. Unemployment rate actually fell back to 3.5%. In the meantime, we've got about 100 million people out of the labor force. So that particular statistic really should not be looked at with any amount of seriousness. But that's what the deciders are looking at. And they're going to decide to raise rates because look at these great numbers. Look at these job gains. Look at these unemployment numbers. So let's raise rates. That's okay because we know what's going to happen. We know what the result's going to be, and we're going to be ready for it. So I hope everyone's ready. Keep stacking. That's why I always say keep stacking whatever it is you stack. Maybe it's food, maybe it's metals, maybe it's cash. Getting ready for deflation. I try to have some of each. Try to be prepared, well-rounded. Hope everyone's well. We're going to wrap it up here. Hope everyone's having a good weekend. Thanks for coming back to this channel. As always, Bull, Boom, Bear, Bust, JJ. I am out. Peace.